Another day and another paper price smash for the fake gold price. On Sunday night at illiquid trading hours, around $4 billion worth of paper gold was dumped in less than 10 minutes. I think it was about 7 minutes. If you have been around gold and silver markets, and I'm using air quotes here, this should not surprise you. And unfortunately, when there's mountains of evidence, and Deutsche Bank had to hand over 350,000 documents and 75 recorded audio and video conversations as part of a U.S. federal government RICO investigation. The bank only paid a $60 million fine. JP Morgan, for participating in this, also only had to pay a $928 million fine, and the manipulation continues. Last week, we had another trial end for another metals trader. This guy was a lower level guy because the senior banksters, the managers who taught these traders of gold and silver, platinum and palladium futures contracts how to manipulate, the senior bank managers, senior traders are not getting in trouble. But these lower level traders are only having to plead guilty to one charge. The judge dropped dozens of other serious charges that were initially filed in this RICO investigation by the U.S. federal government, including far more serious charges like commodities fraud and others. Now, I did go to law school, and when I took criminal law classes from very well accomplished criminal defense attorneys, they would warn how serious RICO investigations were. In the past, they had very draconian mandatory sentencing guidelines. Normally, it was 10 to 20 years minimum in prison once RICO charges were going to get filed against you, and that would mean a long list of felonies. But apparently not for banks and not for traders at banks, especially when it comes to manipulating gold and silver. So the traders a couple weeks ago, I think it was 3 weeks ago, who had other trials settled, they pled guilty too. Some of them even got probation. One of them got a year and a day prison sentence, so only a year, which is a slap on the wrist, and the others got probation. And then no senior managers got in trouble, despite a mountain of evidence that shows that the senior managers were teaching the lower level traders. And these are entry level employees. If you're familiar with any corporate structure, if you're an entry level employee, you're probably not going to blow the whistle. Otherwise, your career is going to end. So there's people who are saying, oh, the lower level employees should have become whistleblowers and they should have spoken up. Yeah, their careers would have ended too. They were used as scapegoats, the lower level employees. Meanwhile, the higher level employees and the bank itself only pays a tiny fraction of a fine compared to the profits that these bullion banks make each month manipulating gold and silver. So will the manipulation end? As James Turk says, it is a managed retreat. This is why gold prices are not capped at $1,000 or lower. This is also why silver prices are not capped at $15 or lower. The truth is, there isn't much economic gold left at below $1,000 an ounce. The same goes for silver at $15 an ounce. I've been writing articles for patrons for the last couple weeks showing that the grades in less than a decade have fallen enormously for silver, been about halved. And that is why over the last 5 to 7 years, pretty much all primary silver miners over the last 5 to 7 years, and recently there was another 2 mid-tier or senior silver miners that have had to buy gold projects. Because the truth is, there is not that many economic silver projects left that are undeveloped, especially at current prices. We are going to need in the next 5 to 7 years a minimum silver price of $30, $35, maybe even $40 silver for new silver supply to come back online. That's the truth. And a lot of the potential new silver deposits are silver deposits that were discovered during the last silver bull market around 2011 when the silver price was much higher. So those deposits are much higher cost, much lower grade silver deposits that will need a minimum of $30 to $35 an ounce silver, maybe even $40 an ounce silver. That is how marginal and a higher cost and high capex those potential new silver mines will be. There are some exceptions to this, but overall it's an industry-wide trend that grades for silver have fallen enormously. And as another part of the managed retreat, price levels for metals, for gold and silver, are defended. The bullion banks and whoever else is involved in the manipulation will try to prevent gold as long as they can from going above and staying above $2,000 an ounce, and silver above $30, $40 an ounce. But they will run out of economic silver to mine at $15 or $20 an ounce, and then silver's price will have to go much, much higher. And then for gold, the minimum price floors for gold are going to have to be a lot higher. There are not a lot of gold mines left that are economic below $1,000 an ounce. With a lot of these gold miners, and I've been writing articles the last 3 or so weeks for patrons as well about this, the cost for gold mining is starting to substantially increase again now that oil prices are not low anymore. So I doubt we're going to see a lot of new gold mines brought online unless gold prices are at $2,000 an ounce or higher, considering how marginal and higher cost and lower grade a lot of potential new gold mines are. There are a few exceptions to this rule, but overall, the industry-wide trend is that a lot of potential new supply will be much, much higher cost in the future. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, and trust me, there are a lot of articles behind the paywall for patrons for only $5 a month that are way more in-depth than this short little video. In fact, in the last couple weeks, there's been about 3 or 4 articles where I spent hours going through annual reports and company investor presentations for proof about how much silver grades have fallen in less than a decade, for proof about how mining costs for a lot of these miners are starting to rapidly rise again, thanks to higher oil prices, labor costs in some of these countries going up, other factors as well. Normally what miners do also when the metals price rise, and this is counterintuitive because the textbook in business school says that when a company produces more goods, they can amortize the cost of goods sold over more units sold. But in mining, the opposite is actually true. What a lot of mining companies do is when the metals prices rise, the mining companies, instead of making sure profit margins are maintained and costs are not rising too rapidly, what the mining companies actually do is they mix in much more marginal, much lower grade, much higher cost ore. And they start mixing that in with their better ore. And that's another reason why mining costs start to rise. So if you want to read more about that, there is a lot of articles behind the paywall over on my Patreon for only $5 a month. There is now 180 articles, charts, and audio podcasts behind the paywall, including 24 new articles out in the last 9 or so weeks. Been feeling a little bit better health-wise, so I've been focusing on providing a lot of value for the premium content. Again, that's going to my Patreon, not to my website or my PayPal. The premium content is only available on Patreon. Just got 6 or so emails from someone who's disgruntled about that, who can't follow directions, which is ridiculous. So thank you very much for listening. So if I could wrap this up, over the next 5 to 7 years, we are going to have much, much higher metals prices for new supply to come online. And a lot of the potential new gold and silver mines are not going to be high grade, are not going to be low cost. And that is the only way the industry can either maintain production or grow production. This is all part of the managed retreat. They cannot knock and cap gold prices where gold stays permanently below 1,000. It would bankrupt all the miners, and there is not economic mine supply, very little of it, available at super low prices because of how marginal so much gold production is nowadays. It's lower grade, it's higher cost, and if miners do go back into a bear market, capital will become scarce like it was in 2014, 2015, and 2016, to the point where a lot of miners back in mid to late 2015 and early 2016, a good amount of producing gold and silver miners were 6 to 8 months away from bankruptcy if there was not a rally in metals prices. So the managed retreat means that the bullion banks and the manipulators can only defend gold and silver prices at certain levels for a certain amount of time before the economic mine supply of gold and silver at those current prices runs out. So that is another reason why the paper price manipulation has not permanently capped gold below $1,000 an ounce or silver below 15. It is just not economically feasible to do that and have any actual real metal available because the miners would all be bankrupt.